What is up, everyone? Dividend Grinder here on a Friday, a beautiful day in Pennsylvania. We're looking at the portfolio today, specifically one of my holdings that is doing absolutely ridiculous, way higher than I expected. I will get into that in just a sec. First of all, look at how the portfolio is doing as a whole. The trade war didn't really do anything in my portfolio. Actually, it increased the past couple days when the whole market kind of was fluctuating there. 11% return. That is absolutely incredible. It'll go down soon. That is way higher than where I anticipate this portfolio to be. It usually fluctuates in the 4 to 8% range of, gain. So 11% above and beyond all expectations I have for this portfolio. $306 in gains, and you can see of that, $65 are in earned dividends. The current portfolio is at $5,700, doing absolutely fantastic, above and beyond all expectations. So today we're talking about the absolute star home run of this portfolio that came out of nowhere. It came out of left field, if we're keeping with the baseball puns. And we scroll down and you're looking at SMHD. That's the ticker symbol. 43%. You can see it as 4% of the portfolio, actually 4.1. It's a touch overweight, but nonetheless, 43%, absolutely phenomenal. And it's a 2 times leverage fund. It is something that I would never, ever recommend to anyone who's in long-term investing. Anything leveraged, I consider way risky and not even worth the risk. However, this is an experimental portfolio. I wanted to give it a shot. I actually heard about this holding from someone on what's called Steam It, which is a social media platform where you can earn money through cryptocurrency called Steam. And he's like, yo, if you're going for a dividend portfolio, screw these like 3 to 4% gainers. You have to go for the home run hitters, the 10 to 20% yields. And I'm like, okay, buddy. And then I looked at this and I'm like, you know what? It's actually not horrible. I thought I would give it a shot. If we look into it on M1 Finance, look at that dividend yield, 18.4%. So the second you look at it, if you've been in the market, for a little bit now, even a couple months, and you're in the dividend investing, you know damn well that if you see a dividend yield as high as this, 18.4%, about 30 red flags are going off in your head saying, okay, let's stay away from this thing. It's obviously not sustainable. The stock price has probably, decreased to a ridiculous point, and that's why the yield is so high, and I bet the dividend payouts are going, lower every month. Well, it's interesting as we go to Yahoo Finance. Since it's a leveraged fund, it's kind of just capturing a piece of the market. So if the market is doing ridiculously well for what it's trying to capture, the little segment that it's trying to capture, it's really not out of the question to get ridiculous yields. And that's what's happening, from the time I bought it to where it is now. So if we go to the 1-year chart here in Yahoo, I bought it right around here from the $15 to $17 range, and it's all the way up to $20 already. And, if you're looking out at the max history of this, $20 is, about common. So I just technically just bought it at a really good spot. Now, a fund like this has never been, back to 2009, so we don't have a gauge on how well it would do during a market recession. However, with the ridiculous yield, Yahoo has a yield of 17.5%, M1 Finance of 18.4%. With a ridiculous yield, it kind of, if the market price stagnates a little, that's, more than fine with me if I can get that ridiculous yield on a consistent basis. So let's take a look at the fund summary. I'll zoom it in here so it's easier for you to see, because I'm going to read it off. And let me get a drink first. Okay, so the fund summary. The investment seeks to provide monthly compounded 2 times leverage, long exposure to the performance of the index reduced by fees. The fund is a series of monthly pay, 2 times leverage, exchange traded access securities, E-Tracks, linked to the performance of the price return version of the selective U.S. small cap high dividend index. So essentially, the whole index, it's to provide 2 times leverage of 100 relatively small cap dividend yielding companies, high dividend yielding companies that are small cap. So when you're talking about small cap companies in general, well then the holding is inherently risky already. Smaller caps, higher risk, higher upside. And that's why when you're doing 2 times leverage to an already risky investment, you can see crazy results. Now, when I first bought this, I honestly expected it to go negative. I was honestly expecting it to go down 1 to 3%. I was going to hold on for it a couple months, let it accumulate some months of dividend appreciation and see, what would happen. Would it even out? Maybe I would be pleasantly surprised. And boy, am I pleasantly surprised. 43%. And the thing about it, it's actually higher because if we look at the gain here, it usually gives a breakdown of market appreciation and dividend gains. You can see it's showing $0 for earned dividends, which is actually untrue. I don't know if it's because they're technically coupon payments, and that's why it's not counting it as a dividend. But I'm definitely earning dividends from this. If we go to the activity, I believe it is on June 19th, if I looked at this right. Nope, I did not look at this right. I'm going to find this one. 21st. Yeah, so there we go. Look at that. SMHD, the E-Trax monthly pay 2 times leveraged, $1.15 in dividends. So I'm definitely receiving dividends from this holding. I'm not quite sure why it doesn't come up. I'm guessing it has something to do with that they're coupon payments and not actual true dividend payments. But whatever the case, that 43% is strictly on capital appreciation, which is incredible because these 2 times leveraged ones on inherently risky stocks, they're not really supposed to be performing this well at all. Now, obviously, with the 2 times leverage to risky stocks, if you do see a significant bump up in that sector, that position of shares, well, then you can see results like this where I've only had this in my portfolio for like 3 months tops and already at 43%. Absolutely insane gains. I do not expect this to be sustainable at all, but hopefully the dividend payments, and it's a shame that I won't be able to see it when I click on this individual holding, the dividend income will kind of negate some of the future losses that are going to happen because let's face it, it's a leveraged fund. It's going to go down at some point. It's really hard for it to go up. So I hope you enjoyed this video. Just taking a look at the portfolio overall, 11%, absolutely phenomenal. You can see that has not been the only home run in the portfolio. WSR here, the Whitestone REIT, was a relatively new purchase, already made 17% on that. LTC Properties up about 25%. Chatham Lodging Trust up over 25%. Gladstone Investment Corp up 18%. The other Gladstone up 24%. Stag has been great, up 21%. Realty Income Corp, the monthly income payer that pretty much everyone who has a monthly stock, monthly dividend payer has. They've been seeing a nice little tear the past couple weeks. So they're up 18% now in the portfolio. And my biggest portfolio holding at 10% of the portfolio, Guggenheim Strategic Opportunities Fund, up 9%. And I swear, I don't know what it is about that holding. I swear it goes up a nickel every single day. So I hope you enjoyed this video. If you are new to M1 Finance or you want to sign up for M1 Finance, I will leave a referral link in the description below. If you sign up using the referral link and you fund your account, you will get $10. I will get $10. Win-win situation on both sides. This has been the Dividend Grinder. I will see you guys hopefully early next week. See ya.